Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. It's been a little bit since we made a video. We did not make one on Friday of last week as I was away on holidays. In fact, I still have holiday shirt mode enabled. So still kind of enjoying the summer weather that we're having here in southern Manitoba where we are broadcasting from. All right, let's get right into the futures performance today. Canola was down a little bit today, $2.50 a ton at 682.60. Minneapolis wheat was off 28 cents at 623 and a half. Kansas City was down a cent and a quarter at 523. Chicago was down 3.5 cents at 541 and a half. Soybeans off a quarter cent at 1007. Soybean oil up 35 points at 54 cents a pound. Corn down 4 cents, right at $4 is where the September closed. The Canadian dollar is down a little below 73 cents now, 72.99. It just kind of keeps leaking lower. Live cattle today, we have switched our reporting to the October as we are seeing a little bit more open interest and volume move into that contract. That was down to 92.50 today. And feeder cattle were down 585 a hundredweight at 319 and a half, let's call it. All right, let's start with the cattle markets today. Things are starting to look a little bit toppy, although you could have said that a couple of times through this rally. Here's October live cattle chart here. We did see a new high last Thursday. It did end that day lower. Then we saw an up day on Friday. I'm just gonna here maybe kind of focus in on this area here. We saw an up day on Friday, and now it's down again today, down near 216. So we're still very high as far as where these are. Again, these are very record high prices for cattle. The feeder market is very similar state here. We saw a new high produced on Thursday, and it came back up to close above the Thursday close on Friday, but took some of those losses away. I'm not a big expert on the cattle market, but just kind of calling out another Canadian podcaster here that talks about ag markets. This is What the Futures podcast. They had a cattle analyst, Ryan Copithorne, on recently. I don't know exactly how long ago this was aired or recorded. Sorry, but they talk about cattle prices. I will link the video. I'll link this video in my video description below if you want to check out a little bit more of a analysis on cattle prices and whether or not they're peaking. And if I remember correctly, they do talk a little bit about risk management in this cattle market as well. All right, moving on to canola. We are kind of seeing canola continue to trade a little bit sideways, kind of leaking lower. Of course, we have broken some support here over the last week. Wednesday, we broke down below the 50-day moving average and below the trend line that we had in place here. It broke the 20-day moving average quite a while ago. It's the low that we're watching now are these early June lows. That would take canola down possibly to 665. And of course, there's, possibility of moving even lower. And why do I say that? It's because we're kind of in that seasonal time frame where canola prices do tend to fade. We tend to see canola prices peak in spring. In fact, we probably saw that happen later than usual this spring because of some of the dryness, because of some of the crush performance, the export performance that we've seen. But even these markets tend to succumb to seasonal patterns pretty regularly. So here's where we are normally at this time of year. So as you can see, we do kind of tend to see weakness as we move through the latter half of July and into the end of August. I can't count how many times I've noticed the canola market bottom, near, the 29th, 30th of August, 1st, 2nd of September, that kind of thing. This chart shows probably about the 10th or 11th of September, but this is a 10-year seasonal chart. It seems that things move around every once in a while. So just be aware of that. Most of our consulting clients that we work with here at Ireland Como Lafoy have hedged some new crop already. Some using put contracts, some using flat price contracts, and other derivatives as well to hedge risk. So make sure that you do have something on the books just in case this does fade and doesn't necessarily come back the way we want it to. So just kind of wanted to show that seasonal chart. Some of the reasons why we're seeing this performance in canola or sideways in the last couple of days is that December or soybean oil has been very flat. We saw the big jump up during the announcement that talked about biofuels. We did see the USDA now adjust biofuel demand up. I mean, the line I want to kind of look at here is here's the biofuel line of the S&D. In June, we saw that number at 13.9. That's billion pounds. And now they moved it higher to 15.5. Now that's 1.6 billion pounds of gain that the USDA did in demand for soybean oil in 1 month. So that's just from the June report to the July report, 1.6 billion pounds. That's a gain of 11.5% of use in biofuel. So obviously that was already priced into the market based on, I'll go back to this slide here. That's obviously priced into the market after we saw these gains up here. It's kind of been flat to a little bit downward here now as we move forward. I think that now the market wants to see some execution on this, which will probably take into the new crop year. If we can't make the soybean market rally on an 11.5% increase in demand on soybean oil, I think that means it's likely largely priced into the market at this point. We would need to see that demand or the estimates for that demand grow in order for this market to react in a further bullish fashion. All right, let's move on to, I just wanted to call out the fact that we have reached a milestone now in our YouTube channel. Over the weekend, we gained a few more subscribers, 100. We got to 100 over the weekend. We're now at 105. Still, the majority of people who are watching this video are not subscribed. So if you are interested in Canadian ag markets, make sure you click on this subscribe button and you'll get all of our videos in your feed. We hope to be bringing you a lot of value, particularly for Canadian farmers, in Western Canadian farmers in particular. So hit that subscribe button if you like what you're seeing, and we really appreciate you subscribing to this channel. Also, if you want to subscribe to our premium content, you can do so as well. That's $99 a month, and you get all of our analysis delivered to your inbox on the regular. In fact, just this morning, we sent out our fundamental report on the post USDA on what it means particularly for Canadians. We talk about canola, we talk about soybean oil, we talk about wheat, and update on futures as well. So make sure you click to subscribe to our premium content. And if you do that, in the meantime, if you do that in the next week or so, I'll send you this report for free, and you can get started and see a back issue of our catalog as well. All right, moving forward into the wheat market. Minneapolis wheat is also kind of behaving in a seasonal fashion. We did see lower than expected, or at least low production numbers out of the USDA. This was the first USDA report that they reported wheat breakdown by class. And, we did see reductions in the spring wheat, which we did expect to see to some degree. Crop condition ratings have been fading, and low acres, around 10 million acres were planted this year as well. However, when we look at the seasonals, again, we can notice that this is a time of year where we tend to see these prices slip and find bottom. Luckily, in December, Minneapolis wheat, we tend to find the bottom closer to the middle of August or into the end of August. So perhaps that's what we're experiencing right now. Wheat's one of those funny things, though, that it doesn't necessarily rally after the market has moved lower. It tends to be a grind to get bullish information out of the wheat market, particularly after the U.S. harvest. So something to keep in mind as far as hedging for going forward as well. All right, just wanted to touch a little bit on September corn as well. I'm not sure that this necessarily signals a bottom. We aren't about you know, we aren't about calling bottoms here at Ireland Coma Lafoy or on this channel. But we did see, corn punch well below $3 on the September contract this morning, and it did rebound back to the $4 mark. It didn't quite make a new high based on this kind of consolidation of trade that we've been seeing over the last week or so. So it's still really precarious, but the kind of the low and then rally into the end of the day uh, is somewhat supportive, if even short term. I think that if we saw the weakness abate in corn, it might help weed out a little bit as well. I just kind of wanted to end on a fun note here. Just kind of wanted to talk about Nvidia stock. Now, this isn't a stock trading or a stock analysis channel, but I just think it's interesting, and kind of we are witnessing some history here, I guess you could say. History for nerds, anyway. This is Nvidia stock, which is largely been gaining some traction recently, not only because of Bitcoin, or it was at one point because of Bitcoin, but now because of AI. Their chips are used to run a lot of these very intensive programs. Um, it now has reached a market capitalization of $4 billion, which is just insane. I think it's the most valuable company now in the world, and it has a market capitalization that is two times almost the GDP of Canada. Even if you add Canada and Mexico together, the market capitalization of Nvidia is larger than those two countries, and it's even larger than India alone. So this is kind of an interesting development, and I thought I'd just end on that note as a fun thing to have. Thank you for joining us. We will see you again tomorrow.